Hey everybody, I wanted to cover this economic predicament that we have ourselves in right now. I don't like to doom and gloom, but I do like to look at the facts, and things aren't looking too pretty right now. It's looking pretty grim. Um, so I wanted to go over some of these substantiated facts, and first I want to talk about this MarketWatch article that came out. Normally they're the type of organization that says, "Oh, the economy is doing much better than you think. You should go invest right now, so we could use our high-frequency trading and drain your accounts." That's how the Ponzi scheme works. They just leverage your money and play with it and all that. But anyway, let's look at this article here. It's just an opinion piece, but still, like I said, it's market watch. You don't expect this from them. How to invest for a global debt bomb explosion. Prepare for an apocalyptic anarchy ending Wall Street's toxic capitalism. That's the name of the article. Sounds like something off a conspiracy website, right? Now it says the big one is coming soon, bigger than the 2000.com crash and the 2008 subprime credit meltdown combined. A huge market blowout, and as Bloomberg Business Week predicts, the results won't be pretty for investors or elected officials. After the global debt bomb explodes, don't expect the typical bear correction followed by a new bull. Wall Street's toxic pseudo-capitalism is imploding. Be prepared for a massive meltdown. Yes, already the third major bubble bust of the 21st century, triggered once again by Wall Street's out-of-control fat cat bankers, and it's dead ahead. Can your family survive in the anarchy after the debt bomb explodes? America is already descending into economic anarchy. We're all trapped in a historic economic supercycle, a turning point that must bleed through to a no man's land of lawless, self-destructive anarchy before a neo-capitalistic world can re-emerge. Investors tell me they feel it at a deep level. They know it's happening. They keep asking, what's the best investment strategy to prepare now? This is no joke, folks. Are you prepared or preparing? Will your family survive in a post-apocalyptic world when anarchy is rampant in America? Look at Washington, Wall Street, and corporate America today. You know it's already begun. You are witnessing a fundamental breakdown of the American dream, a systematic breakdown of our democracy and our capitalism, a breakdown driven by the blind, insatiable greed of Wall Street, dysfunctional government, insane markets, economy on the brink. Multiply that many times over and see a world in total disarray. Ignore it now. Tomorrow will be too late. So they're basically saying that we need to prepare, get some food ready, get some water ready, and you don't need to go out and buy hundreds of dollars, thousands of dollars of freeze-dried food. You need to go buy a couple bags of beans, a couple bags of rice. That could help you survive for 6 months or a year. You're not going to be eating like a king, but at least you'll have food. That's what it's all about. Now I want to take a look at this um, time-lapse chart right here. Now this is based on actual facts. It's the U.S. Department of Labor Bureau. Now this is a time-lapse graph of the unemployment rates in the United States. The yellow here is going to be like 2 to 5%. The purple parts are up to 9.9%. And so the darker it gets, the worse unemployment rate gets. And this is November 2007 right here. And you see just like a cancer spreading. Now here's the recession where it hit right there. And just covering the country. It's like you could see the United States dying. Like I said, these are based off of official numbers. And you can find a link to this video in the comments section. But now I want to look at something else that's pretty scary. What caused the whole recession to start with was, you hear it was subprime mortgages, but the subprime mortgages weren't the big deal. You can see this is where the wave of subprime started to default. But the problem wasn't just the subprime mortgages, is that these mortgage-backed securities were linked to what they call credit default swaps, which is basically like an insurance option that you could buy. So if the mortgage-backed securities fail, then you get your money from somebody else. But the big problem is these mortgage-backed securities, well, they're linked to the I mean, the credit default swaps are linked directly to the mortgage-backed securities, but they don't have to be. You could buy insurance for the mortgage-backed securities to fail without actually owning the mortgage-backed security. An analogy for this is like, say you own a house, or say you don't own a house. Say you're buying insurance on somebody else's house and hoping it's going to burn down. But say, what if you knew that that house was going to burn down? You could still buy insurance on it without actually owning the house and stand to profit billions. So when the mortgage-backed securities started to fail, the brokerages that sold the credit default swap started to fail because there's no regulation on Wall Street, and they don't even have to have the money to back it up. They didn't have any proof. They didn't have the money. You know, there's a $4 quadrillion derivatives bubble right now, and it's all based off of you know, they could leverage their money 10 to 1. They don't have to have the money to cover any of their bets. So it just started a domino effect with this Ponzi scheme. It's just a house of cards, and that's why we really, you know, that's why they had to bail out all these companies, because if they didn't bail them out, they just would have failed. It wouldn't have just been one company failing, because when one company fails because they have credit default swaps, then another company fails because they didn't have the money to cover those bets. So it's just insanity. But you know, we already saw the subprime wave really hit, but the wave that's coming in the future is the alt A's and the option arms. Now, with these mortgages, they're already starting to default, but the problem is that they have teaser rates where they get a teaser rate where they're paying 0% or close to 0% interest the first 5 years or the first 3 years of the mortgage. So after that rolls over, then they have to actually start paying the interest rate, which is like they're paying an $800 a month house payment now, say, and then once it rolls over to the new rate, they got to pay $1,500 a month just because they have to start paying the interest on it. And people are defaulting on the cheap little teaser rates now, so they're gonna have like massively high default rates when that kicks over. They're calling for like 70% default rates, which is insane considering they're pretty good investments, you know, for the mortgage-backed securities. The subprimes are just crap, but that's the whole point of the mortgage-backed securities, is that they could play with the numbers and make a really crappy investment look like AAA credit rating. So anyway, moving on. We also have China here, and China is really pissed at the United States right now because, as you've heard in the news, um, Obama decided to make a $6.5 billion arms deal to Taiwan, which is China's arch enemy, basically. And directly after he decided to make the arms deal, Obama comes out and says that he wants to meet with the Dalai Lama in Tibet. So we're basically poking at the beehive right now. The problem is that China's an economic superpower, and you know, not only do they produce everything, and you know, they could, but more than that, they own about $2 trillion in bonds, in United States bonds. So now the China's People Liberation Army, which is the army in China, is calling for Chinese investors to dump the United States bonds because it could completely destroy the U.S. if they actually did it. Now, it's important to remember that the army doesn't actually have control of the investment arm of China, but still, that's what they're calling for. And the reason that this could destroy the United States economy is because basically they're holding $2 trillion. If they dump it back into our market, it's going to flood it. It's going to dilute our money supply, so our money is going to be worth less. So everything's going to cost more, which would destroy this house of cards Ponzi scheme that we have set up pretty much instantly. And so that's what they're able to do right now. But really, like I said, when you look at all those facts, things are not looking good. So it's a good idea just to get a couple bags of food and start preparing.